Hey everybody, I hope everyone is doing well and had a good day. In this video, I'll do a brief review of the Emini 5-minute chart from today, Monday, May 19th, 2025. And I want to start by talking about the day structure, because you'll notice I have kind of two options for the day structure for today. And you could see it as a spike in channel bull trend day, or you could see it as a bull trading range day. And I'll demonstrate that in a different slide here. So you can see the vast majority of the day was spent going sideways. So these blue rectangles can kind of outline the fact that there was a lot of two-sided trading through here. So bull breakout, but then trading range, and then a breakout here that eventually transitioned into another trading range. So strong rally on the open, but again, the vast majority of the day was spent going sideways. And we had a lower trading range and an upper trading range. So with that said, going into the day, there was a big gap down. It was about 1%. And whenever there's a big gap, it increases the chances of a trend day. And in general, it increases the chances of a trend day in the direction of the gap, but there can be a trend in either direction. And today we had a big gap down followed by a strong rejection of the gap. So we fell far below the close of Friday, but on the open, there was a strong bull trend bar with a follow-through bar and another follow-through bar. And the bulls kept getting strong follow-through here. And because of that, that significantly decreases the odds that we get a bear trend day today and increases the chances of a bull trading range or a bull trend day. And you could call today a bull trend from the open today, from the very first bar. And I'm not sure if this chart that I have on TradeStation is actually correct. The data is accurate. It's really rare for the open of the day to remain the low of the day or the high of the day. But anyway, strong breakout on the open. So bulls get a strong breakout with many bars. And here we finally got a pause in momentum. So big bar, maybe a smaller bar here, smaller bar, but the body's all fairly uniform in size. This is a strong bull breakout, also starting far below the moving average. So the market is far below one measure of fair or average. And basically the bulls see that as a discount. And when the bulls have value and momentum, the market can rally really quickly. So finally a pause in momentum, but nothing to sell. So a bull breakout, a pause, another bull breakout. And this was actually all one simple leg. So this was all a micro channel. We did not have a technical pullback until this bear bar went below the prior bar. So really strong bull breakout on the open. Certainly the dominant feature of the day and probably going to influence the rest of the day. So reversal day or bear trend day, very unlikely. Most likely going to be a bull trend day or some variation of a bull trading range day. From here, we got what you could call a three-legged pullback. There's an implied high one here because we did not fall below the low of a prior bar, but we had an inside bar and triggered above it, high one, pullback, high two, pullback, high three. So you could call it a truncated wedge or an inferred high three, basically a wedge bull flag. And you have to ask yourself through here, is this a major trend reversal or is it a minor reversal? And if it's a minor reversal, you have to wonder if the market is going to convert into a trading range or trend resumption. Because most major trend reversals convert the market into a trading range. Only about 40% succeed in creating an opposite trend. But here, if we're going to get a major trend reversal, what are some of the ingredients we need? Well, first we want to see significant trend line break. So really strong bull trend. Breaking the trend line, yes, but where are the big consecutive bear trend bars? Inside bar, bear bar, but huge tail. It's actually, you can call it a bull bar. It closed above its midpoint, so the bulls control the bar, the buying pressure into the close. So really, through this trading range, inside bars aside, the bears had one breakout bar. So we know this is a minor reversal, and the odds are we're probably going to retest the highs before we get any significant reversal, unless the bears do something impressive, and they did not do it. So through here, minor reversal, bulls can buy and scale in, expecting trend resumption. Bears, they might be selling above bars for scalps, but the best the bears can hope for here is the trading range. If you can see the faint blue lines, there's also a triangle here, so higher lows, lower highs. The market's in breakout mode, but in a strong bull trend. And so the breakout direction is favored by the bulls. More likely, this triangle breaks out to the upside than the downside. And it did. And a lot of the time after a breakout of a triangle, the market goes back and tests the breakout point or the apex of the triangle or some, in this case, some support level. And that's exactly what we did. So we got the bull breakout and follow through to a new high. Sellers at a new high as we're now in the channel phase, but the reversal is just one bar and it's right at support. So we're back to sort of the apex of this triangle and the breakout points. So the bears were unable to get follow through selling, and now we have support at breakout points, the apex of the triangle, the moving average, the bull trend line. So clusters of support, really difficult for the bears to get much traction doing anything here. And then there's also a sort of vague red dotted line here for the channel line. There's a couple of different ways to draw the bull channel here today. In the darker one, I have connected this high to here, and sort of the more broad channel, but it's still fairly tight. And then here, connecting these highs. Either way, tight bull channel, easier to make money buying, and really as far as selling, not ideal. Every time the bears got a decent bar, the bulls bought it. Another decent bar, they bought it. And you can see every bear bar was followed by a bull bar. And then up here, finally, we got a bull breakout of the bull channel lines. And in general, there's a 75% chance that a breakout of a channel line reverses within 5 bars, and then we go and test the trend line. And that's exactly what we got here. So bull breakout of bull channel lines. But after maybe 2, 3, 4 or 5 bars, the market starts going sideways. And the odds are, and we think about the logic, why do most breakouts of channel lines fail? Because at this point, the bulls are exhausted. And the bulls are taking profits at new highs. So we have a spike, pullback, channel. The bulls take profits at new highs. We break out to a new high. They take profits. Break out to a new high. Profit taking. And we suddenly get this strong micro channel. And this is a common trap. It is a strong micro channel, but we have to assess the context. It's late in a bull trend, probably 40 or 50 bars into a bull trend at this point, and it's breaking above the channel line. So really, the bulls might see this as a gift. And if we do not keep the momentum up and we start to stall and go sideways, a lot of bulls will start to take profits and bears will start selling. Betting will fall back to the average price, the bull trend line, test the opposite side of the channel, and that's what we got here. So breakout of the channel line, tight trading range, momentum lost for the bulls, and then we get a strong bear breakout. 3, 4, 5 consecutive bear bars, second leg down likely. We paused here. I'm not sure. I don't think we pulled back, but we paused here and then got a second leg down, and this is a small sell climax testing support to the left. And this is kind of the opposite of this on a smaller scale. So if we went down to a 1 minute chart, we'd see some kind of bear trend and an overshoot of a channel line, which is just like what we got up here. So we overshoot the bear channel line with one of the biggest bars, probably the biggest bar in this sell-off. So another common trap. A sell climax is a bear trap in certain contexts. And here we're breaking below the channel line. We expect a reversal within 5 bars and a test of the trend line. And that's what we got just about maybe 2 or 3 bars later. And then here, bull breakout, big down, big up, probably a trading range. Unlikely that this resumes straight up and we get a V bottom. So in other words, it's more likely we get a retest of this bear trend's extreme. And the bulls need a major reversal. Big down, big up, strong enough breakout for a second leg. The bulls get a small second leg, but this still needs a second leg down. And now we're at maybe close to a 50% pullback of the sell-off. We're testing where the momentum paused, and we trapped traders here. So we tested it once, found resistance, testing it again, and finding resistance again. Outside bar, follow through. Bears get a retest of the lows, but now we have a double bottom and still testing support to the left. And the bulls will see this as a lower low, major trend reversal. I'll usually save that term for more major patterns, but that's basically what's unfolding here. We have a bear trend, a trend line break, retest of lows, and the bulls going for the major reversal. But it looks like in this case, we are remaining in a trading range. So rather than getting an opposite trend, maybe getting to new highs, the bulls got breakout above this lower trading range, but no follow through, and we reversed right back down into the middle of the range. So that's going to be it for today's review. Thanks everybody for watching. Please feel free to leave questions or general comments in the comments below. And as always, remember that these videos, these reviews that I do are kind of like supplements, but they really cannot replace what the Brooks trading course will give you in terms of value and just price action knowledge in general. So if you have not studied the Brooks trading course, you can find a link to it in the description of my videos. And I don't think there's any price action authority in the world better than Al Brooks. So again, if you have not studied the course, I just urge you to see if you can get the course, because I promise my videos alone will not be enough. They may be helpful, but you'll get a lot more out of the video course. All right, that's going to be it. Thanks everybody for watching, and I hope everyone has a good night.